All right, thank you very much for joining me here today. I'm Don Ma. I appreciate you watching. To start off, some China-related stories. And I think the biggest one here today is not good news for Chinese stocks and equities. I think it's not something that Chinese companies, some of them at least, is wanting to see. So, Global Stock Index compiler MSCI is deleting dozens of Chinese companies from its benchmark China Index. And this could further worsen money outflows from Chinese stocks. And of course, this comes on top of an already massive stock market rout. The index provider announced this week that it's going to drop 66 securities from the MSCI China Index. And by the way, the MSCI China Index, this is one of its flagship China indexes. And this is the highest number of companies being removed in at least 2 years. Now, as we've seen, the removal of Chinese stocks come amid worries about China's troubled economy. China's stock market has been in a protracted slump since recent peaks in 2021, with more than $6 trillion in market value having wiped out from the Shanghai, Shenzhen, and Hong Kong markets. And at the same time, investors are concerned about a myriad of challenges facing the world's second largest economy, including, but of course not limited to, a prolonged property downturn, high youth unemployment, deflation, and a rapidly falling birth rate. So for those who are unfamiliar with what MSCI is, the index provider is most known for, to put simply, making lists based on different categories of stocks and showing how companies or stocks are doing. Now, inclusion in the MSCI indexes is seen as a mark of prestige, and of course, the reverse is true when stocks are removed. And Americans are becoming more concerned about Chinese companies owning parts of factories in the U.S. Illuminate USA is a solar panel developer that has been attracting positive and negative attention. NTD Shar Marshall has more on that.
Bring manufacturing to American land with a solar panel factory in Pataskala, Ohio. Some say it's a great idea, but some see a problem with one of the developers being a Chinese company. Illuminate USA is a joint venture between Invenergy, the largest private U.S. renewables developer, and LONGi, the world's largest solar panel manufacturer. LONGi has raised suspicions because it is based in China. Pataskala is now infected with the cancer known as the Chinese Communist Party, Jerry Fornes, a resident, said at a city council meeting in January. The 2022 Inflation Reduction Act provided incentives to support buying local, but foreign manufacturers can receive tax credits if they open U.S. factories. According to Financial Times, 2 planned battery plants in Michigan and a wind farm in Texas also have ties to China. Republican Senator Marco Rubio and Representative Kara Miller introduced legislation in December that would stop the tax credits from going to Chinese companies. Sean Marshall, NTD News.
Now onto markets. Wall Street's main indexes tumbled on Tuesday after a higher-than-expected consumer inflation reading pushed back market expectations of imminent interest rate cuts. Here's a quick recap of markets.
Wall Street's main indexes ended sharply lower on Tuesday after hotter-than-expected inflation data squashed expectations that the Federal Reserve would lower interest rates anytime soon. The Dow posted its biggest one-day percentage drop in 11 months, shedding nearly 1.4%, with the S&P 500 losing about the same. The Nasdaq plunged 1.8%. A Labor Department report showed U.S. consumer prices increased more than economists had forecast in January amid a surge in the cost of rents. But bumps along the way to the Fed's annual target rate of 2% inflation are to be expected, says George Cipollone, portfolio manager at Penn Mutual Asset Management.
I think the bump that we saw this month was relatively minor in the grand scheme of things. Inflation still is heading in the right direction in terms of a downturn. I do think there are deflationary forces coming from China, for example. I do think a lot of the inflationary pressures that we felt through COVID are over at this point. So I still think we're heading in the right direction. It's just these little bumps that, again, it contrasts with the expectations of a straight downward move in inflation, but in reality, everything doesn't move just in one direction.
Markets have rallied this year on bets that the Fed would start trimming rates in May. June now looks more likely. In company news, shares of Lyft, down more than 2% at the close, skyrocketed after the bell when the ride-sharing company posted fourth-quarter profit that beat estimates and said it would generate positive free cash flow this year for the first time ever. JetBlue shares soared nearly 22% after activist investor Carl Icahn reported a nearly 10% stake in the airline, saying the carrier stock is undervalued. TripAdvisor stock jumped nearly 14% as the online travel agency formed a special committee to evaluate deal proposals. And Nvidia ended the session with another milestone. Although shares closed down marginally, the chipmaker's market capitalization reached $1.78 trillion, eclipsing Amazon's and making it the fourth most valuable company in the world, behind Microsoft, Apple, and Saudi state oil giant Aramco. Amazon, whose shares dipped more than 2%, slips to number 5.
So, of course, today's Valentine's Day, so we have a number of Valentine-themed stories for you today. Now, sweet treats for Valentine's Day may come with a bitter taste for romantics buying candy without looking at the markup. Some candies appear to be priced much higher than their regular counterparts. When comparing the cost, for example, of a Sour Patch Kids, a former data analyst reported that a regular box costs $1.24. But she found the same size in a heart-shaped box listed on Walmart for almost $4. The same candy at a CVS store in New York costs just under $7.50. Walmart said it was looking into the price difference, and CVS said Valentine's Day candy varies based on cost or quantity. Seasonal items are typically made for a limited time in limited quantities, so keep a lookout on how much you're paying for candy. And of course, with Valentine's Day being the third priciest holiday on the calendar, experts are sharing tips to navigate gift giving. Americans are projected to shell out nearly $26 billion on this day this year, according to Wallet Hub. And it turns out couples tend to have different spending habits, according to a University of Michigan professor. That's why he's recommending big spenders and tightwads meet in the middle and put serious thought into purchases. The professor's broader advice is to have a joint account for shared expenses as well as separate accounts, and to be transparent about expenses without tracking every charge. So Valentine's Day and love is everywhere, especially at the checkout counter. Consumers are expected to shell out big bucks on their Valentines this year and getting some new records set in the process. But, you know, love may not cost a thing, but Valentine's Day may be pretty expensive. Here's more on that.
True love is priceless, but this Valentine's Day, Twitter-pated consumers are showing their affection with some big spending, according to the National Retail Federation.
Consumers are expecting to spend around $25.8 billion this year, which is on par with last year and the third highest we've seen in our survey's history.
That breaks down to a whopping $185 per person. The NRF's Catherine Cullen says their survey also found in 2024, love is in the air.
This year, consumers are really focusing on the romantic aspects of the holiday. They're spending record amounts on significant others and really prioritizing gifts like jewelry or an evening out.
Despite new federal data released Tuesday showing inflation continuing to cool year over year in January, that evening out or a box of chocolate may still be pricey.
We look at food away from home. That is up more than other cost categories, and so is candy. Price of sugar has really been up all around the globe.
But Bankrate's Mark Hamrick says even if inflation remains a little sticky this Valentine's Day, a strong economy will make the road ahead just a little bit sweeter for everyone.
The economy in the United States has remained not only more robust than expected, but it's been the star performer compared to our would-be peers all around the globe. That's something for Americans to celebrate.
Meanwhile, thousands of drivers for ride-sharing and food delivery services in the US and UK are expected to strike on Valentine's Day. The strike is over pay and working condition disputes. In the US, the campaign group Justice for App Workers plans to stop giving rides to and from all airports in 10 cities for 2 hours today. And in the UK, the campaign group Delivery Job UK said more than 3,000 food delivery drivers were expected to strike for 5 hours Wednesday. So Valentine's Day is all about celebrating love, and for some, that may mean buying your loved one diamonds. Whether you're in the market for an engagement ring or just a sentimental piece of jewelry, it's important to do your research on diamonds. So should you buy a natural or lab-grown diamond? Here's a look at the pros and cons of buying lab-grown diamonds and how they differ from natural ones.
When it comes to engagements, Valentine's Day is one of the most popular holidays to pop the question. And like your love, a diamond is forever, so you want to make sure you're doing your research. The first decision is whether to buy a natural diamond or a lab-grown stone.
We have learned how to pressurize carbon in a lab.
Rachel Akmakjian with Brightco says lab-grown diamonds are becoming more popular. And if you put one side by side with a natural stone, they look the exact same to the naked eye.
It's just like growing a rose in a greenhouse versus growing it in your garden.
Whether you're buying a natural diamond or lab-grown, you're still going to ask about the 4 C's. Carat, the weight and size. Color, D being the best because it's colorless. Clarity, whether the stone is flawless or has some blemishes. And cut, which is how the stone captures light and sparkles. The big difference between natural and lab-grown is the price tag.
There is a pretty significant savings when you go with lab-grown diamonds.
According to Brightco, lab-grown diamonds can cost 50 to 60% less than a natural diamond. That's because lab diamonds only take a few weeks to make. The process to mine a diamond is much harder.
There's a certain challenge to getting that diamond from the mine to your finger, to the consumer.
Here's another big difference: value. When you buy a natural diamond, you're making a serious investment. A natural diamond will retain its worth, and it's also going to cost you more to insure.
Now, Federal Reserve policymakers waiting for more evidence of easing price pressures before they cut interest rates may find themselves waiting a bit longer after a government report yesterday showed consumer inflation stayed elevated last month. Here's a look at that.
U.S. consumer prices ticked up more than expected in January, their highest increase in 4 months. The Consumer Price Index, out Tuesday from the Labor Department, showed prices rose 0.3% from the month before, slightly above economists' estimates. The so-called core CPI, which excludes volatile food and energy prices, also rose marginally. And the annual inflation rate, while slowing to 3.1%, also came in above estimates. The pickup in inflation was largely driven by housing costs, including higher rents. Tuesday's data comes against the backdrop of a still strong labor market and resilient U.S. economy, and likely means the Federal Reserve will be in no rush to start lowering interest rates. While inflation has dropped significantly from a peak of more than 9% in June of 2022, it's still hovering above the Fed's annual target rate of 2%. Investors who just a few weeks ago were hoping for a March rate cut from the Fed now see June as more likely. That rattled markets Tuesday morning, with all 3 of Wall Street's main indexes plunging more than 1%.
Hopes of a rate cut in March are diminishing amid a hotter-than-expected consumer inflation reading. Now, most analysts are pushing back their expectations to June. The Labor Department's latest report shows the Consumer Price Index rising 3.1% on a year-to-year basis in January. In response, Wall Street's main indexes dropped to 1-week lows. A bulk of the CPI strength came from rising shelter costs, and inflation was up for medical services and airfares too. Some of the report pointed to disinflation, with prices down for gas, cars, clothing, and goods. And while the job market is still strong, with 353,000 jobs added in January, this result is not expected to push the case for sooner rate cuts. And as for the Personal Consumption Expenditures Price Index, which the Fed uses to measure inflation, it rose 0.2% in December, which is in line with the 2% inflation target. We also have a few earnings report coverage for you today, and with that, Japan's Sony slashed the full-year sales forecast for its PlayStation 5 console on Wednesday and said it plans to list its financial business next year as it focuses on entertainment and image sensors. Here are the numbers.
Sony beat forecasts over the third quarter. The PlayStation maker said Wednesday that profit jumped 10% to just over $3 billion. But there's a shadow over its flagship PlayStation console, with the company slashing its full-year forecast. It had targeted sales of 25 million consoles over the financial year, and now it's cut that to 21 million units. The number fell after Sony saw weaker than expected sales over the year-end shopping season. It further expects a gradual decline in unit sales from the next financial year, and said it has no plans to release any major franchise game titles in the coming fiscal year. That's a contrast with rival Nintendo, which last week actually raised sales forecasts for its aging Switch console. However, Sony did better across its financial movies and music businesses. Once known as the inventor of the Walkman, it has transformed into an entertainment and tech behemoth. Sony does everything from making chips to being the record label for stars like Lil Nas X and Usher, and now it has big plans for a major move on shares. It's planning to list its financial unit in October next year, and says it will retain a stake of just under 20%.
Nvidia was on the verge of overtaking Alphabet as Wall Street's third most valuable company on Tuesday, as the dominant AI chipmaker ended the day with a market capitalization above Amazon's for the first time in 2 decades. Take a look at this.
Nvidia is now more valuable than Amazon, and it's got another target in its sights. The chipmaker overtook the e-commerce giant in Tuesday trading. By close of business, its stock market value stood at $1.78 trillion. That was just ahead of Amazon, which saw its stock sink over 2% during the day. Nvidia is seen as the big winner of the AI boom, with its chips powering chatbots and other such products. It hasn't been more valuable than Amazon since 2002, when both were worth less than $6 billion. Now the gains make it the 4th most valuable firm on Wall Street, and it's just a few billion short of Alphabet. Overtake the Google parent firm, and only Microsoft and Apple would be more valuable. Both are worth around $3 trillion. The Windows maker recently took top spot, boosted by its prominent role as a big backer of OpenAI, the maker of ChatGPT. Apple slipped to second on concerns it is lagging rivals in developing the new technology. Worldwide, Saudi oil titan Aramco, at about $2 trillion, is the only other firm still more valuable than Nvidia.
And Lyft beat estimates for quarterly profit on Tuesday as it cut costs and saw demand for rides to stadiums soar, thanks to tours by Taylor Swift and Beyoncé. Here's the report.
Lyft is feeling the Taylor Swift effect. The ride-hailing app saw demand for trips to stadiums soar 35% over the past year, driven in part by the pop megastar's latest tour. Those numbers came as Lyft revealed forecast-beating earnings on Tuesday. But it was a day of wild moves for the firm's stock after a huge mistake in a corporate statement. Lyft said a key metric for profit margins was set to rise by 500 basis points, only to later say there was one too many zeros in that number. It should have been 50 basis points. The stock had surged 67% on the initial number, only to then lose most of those gains following the correction. Legal experts say the firm could now face lawsuits from investors who got burned by the plunge. Still, as the chaos subsided, investors found positives in the earnings numbers. New Chief Executive David Risher, who took over less than a year ago, has driven aggressive restructuring. That has helped cut costs by 12%. The firm also maintained its market share despite fierce pressure from bigger rival Uber, and it's predicting it will see positive free cash flow for the first time in 2024. Risher says growth this year will be helped by new partnerships with brands including LinkedIn and Starbucks. One analyst told Reuters it all points to a company that is coming out of the woods after a tough few years. In the end, Lyft shares were up around 17% in late after-hours trade.
Now, a bit of information on social media. As the U.S. worries about the side effects of social media, laws have been rolled out around the world to protect teens online. The European Union is leading the way with its Digital Services Act, which forbids tech companies from targeting children with personalized advertising and allows companies to be sued for breaking this law. Whereas in the U.S., tech companies are protected from lawsuits over content posted on their sites. Brazil and India have also passed laws to protect data collection from kids online. China, which already largely blocks access to social media platforms as part of its larger internet censorship, also limits what can be shown to kids and imposes daily usage. And now just a quick update on Bitcoin. We're seeing a 2+ year high for Bitcoin as the world's largest cryptocurrency hit $50,000 for the first time since December 2021. Bitcoin has more than risen 16% so far this year. The cryptocurrency is rallying under expected interest rate cuts later this year, which analysts and financial markets are predicting could potentially start in May. It's also riding off last month's ETF launch day after U.S. securities regulators approved a number of spot Bitcoin ETFs to be listed and traded. Crypto stocks overall have seen a boost. And thank you very much for watching NTD Business Today. That's all the stories we have today. See you soon.